All right, Tuesday, Technical Tuesday. It's time to talk about some technical indicators and learn how they're used, how they're calculated, show you how I use them in my charts. And of course, doesn't mean you have to use these. My recommendation is not to put too many things on a chart. In fact, if there are multiple indicators you want to use, I would recommend creating multiple favorite charts that you can flip back and forth. I'll show you how to do that here in a second, and I'll show you how to get the ones that I've created. We're going to talk about money flow today, as well as tax loss harvesting. But before we do that, let's take a look at the market. The market continued to go up today after the midday update. And as always, I'm not a financial advisor, so this is for educational purposes only. Let's jump over to the charts page and take a look at the 10-minute charts and see where we ended the day. And you'll see the market just kept on going higher. There you go. Big gap up, pull back right in the beginning, and then took off and never stopped. It actually ended with a green bar at the end of the day. So these are 10-minute bars. Notice money flow up here. We're going to talk about this, what this is tonight, but it's back near the top. It was down here. Even at the open, it was way down here. Money flow was down. So it's come all the way back now. So that looks really good. Technology came back. Financials kind of went sideways. Discretionary sideways. Communications made a nice run, and then industrials was sideways. So technology is the big one. That's the one that really moved the market more than anything else today. On the defensive side, healthcare was down, flat, let's call it. Staples, I would expect to see these down because they're defensive. I don't expect rotation into a defensive area if the market is so bullish as it was today. So staples was down slightly, energy down, utilities down, materials pretty much flat for the day. And then if we look at rotation, interestingly, growth versus value still never made it back to the high from Monday. So that, just wonder about that one. Discretionary versus staples, it had a nice day and then kind of rolled over at the end. So we'll see what happens tomorrow. Technology kept moving higher, but again, did not make it back to the high from Monday. Semiconductors did, though. They went up. So that looks like the area that really drove the market higher. Semiconductors and internet was actually down slightly for the day. And then if we look at growth versus value, this is using the Russell 2000, and you can see that actually just kept on going higher. This was the strongest index today. Money flow was way up there. Large cap growth versus value. Now, when I showed this at around just before noon today, this actually had been going down. All these had been going down, and they actually never really recovered much. The large cap growth versus value was the best. It came back, but it did not get above Monday's high. In fact, it's pretty much where it was last Thursday and Friday. Mid cap and small cap growth, however, even as well as this did, it looks like it's being driven by value stocks instead of growth stocks. So that is a little bit concerning to me. You would expect that if the rotation is into growth, then as the Russell 2000 takes off and does really well, you would think the growth would do really well also. But that's not the case. Instead, growth versus value was actually down for both mid cap and small cap and pretty much flat for large cap. So don't know what that's going to mean. We'll see probably in the next couple of days if that has any effect on what happens. But it looks to me like the rotation is into value. And then finally, the trend, which is a short-term indicator, you can see it's continued to move down, which is positive. So it's counterintuitive. If this goes down, then the market goes up. And you can see the up volume minus the down volume was huge today. Huge up volume all day long, just kept on moving higher. Advancers minus decliners kept going up as well, but the volume was going much stronger. So that actually fares well overall for the market. So this is a way you can look at something on a short term. You can see it did it over here as well, back here on Monday last week. So we'll see what happens tomorrow. It's going to be interesting of how this plays out. All right, one more thing I want to show you over here on the web page for subscribers in this blue column right here, there are some relative charts in here. And I want to show you the cap weighted versus equal weighted. So cap weighted is all of the large cap, basically Magnificent Seven, you could think of it that way. But all the largest cap stocks, and then we look at it versus equal weighted. In other words, giving them all the same weighting, giving all the large cap, big cap tech stocks the same weighting as every other stock in the index. And you'll see the difference here, and it's very interesting actually. So we'll start with the S&P, cap weighted versus equal weighted. And what you see is cap weighted is going up significantly, almost parabolic. That's the blue one. The green one is the equal weighted. So if we gave all of these big cap tech stocks this exact same weighting as every other stock in the index, this says NASDAQ, but this is actually the S&P. So this should be the S&P right here. Let me see something. Nope, this actually is the NASDAQ. Oh, the S&P is just the index that I use in the background. That's why. So this is the NASDAQ, cap weighted versus equal weighted. Equal weighting actually is moving down. Its trend is down while cap weighted is up. You can see it down here as well. QQQ is the cap weighted index. QQQE is the equal weighted index. This is showing you that this whole market is being driven by just a few stocks. Those 10 or 15 large cap stocks are really driving things up. So that actually, I'm not sure if that's sustainable, but it doesn't really matter if the market's going higher. So yeah, it's the NASDAQ. I must have didn't put the S&P back in there. Let's see if I have the S&P one here. There we go. There's the S&P cap weighted versus equal weighted, same thing. So S&P cap weighted much higher, equal weighted just starting to pick back up, but it's lower than it was before, whereas cap weighted is not. It's much higher. So down here is the S&P cap weighted versus S&P equal weighted, same thing. You can see that those just a few large cap stocks are really what's driving the market higher. All right, just wanted to point that out. Thought that was very interesting. So let's go now talk about money flow. So first I'm going to talk about what money flow is. There's a couple of ways you can look at it, but two of the ones I'm going to show you is money flow index, or MFI. This basically essentially is a volume weighted version of the RSI. So that's the way to think of it. The RSI is relative strength index, basically shows the strength of a price move over some period of time, usually 14 days. So it's showing you the strength of the move itself. So it's not relative strength relative to some other index or some other stock. It's the relative strength of that particular stock and how it's moved in the last 14 days. What MFI does is it adds on top of what RSI is, it adds volume to it as well. So that's why it's called money flow, because volume really gives you an indication of the money flow in and out of stocks. What you'll notice when I show you these together, they are very similar. They act kind of the same, but sometimes money flow can move sooner, a little bit sooner than RSI will. And I'll show you how I use them in my charts as well. So you can use it to look for overbought, oversold levels. It is a bounded oscillator. Bounded means it has a extreme high and extreme low. In this case, it's 80 and 20. You can see right here, 80 and 20 are the areas that it trades within. So bullish and bearish divergence can be used. So you can use, this is really good for divergences, just like the RSI is. So that's why I like to use them together, actually. So it will warn of unsustainable price extremes, overbought and oversold areas. This is the money flow MFI down here. So there's 80 at the top and 20 at the bottom. So you can see right down here, this is not overbought yet. That's Tesla. Down here, you can see again, in this particular case, this is Lululemon. And in this case, the money flow is overbought. So it means that it might be reaching an extreme, but notice that it hit the extreme up here before the price high was put in, and then it rolled over and started coming down. So that's what it means by it can warn you of extremes. Now, it can stay, just like any oscillator like this, it can stay up there for quite a while. So you have to use other indicators to determine when or where that's potentially going to go. But usually when it goes back below the 80 line, that's when you start to have to worry. Now, that didn't happen until right in this area here. And you still had another leg up before it actually rolled over. Down here, just like with the RSI, in this case it's 20, the RSI uses 70 and 30, but down here is oversold. So this means that it might be ready to start to climb back up. And it climbed, money flow climbed into the middle, and then it went overbought again way up here. So you can kind of see where it's giving you some warnings. Now, in this particular case, it went down. So if you thought that maybe this is where I'm going to get in because it's going to go right back up again, well, it stayed underneath here. So what I like to do is I put a 45 line in here, and I've tested this against a number of different stocks and how they react. 50 I found isn't quite right. I'd like to see it go, can allow it to go a little bit lower. So I put a 45 line right across here. And if it's above 45, then that's positive momentum. And if it's below 45, especially if it stays below 45, like it did down here, then that's negative momentum. So even when it crosses over and starts to move up, I like to see it get above that 45 level. You'll see this in the charts when I show them to you in a second. So that's what money flow does. It can show you divergences just like this, just like the RSI does. There's the calculation right there. So divergences it's really good for divergences. And here's how it's used in sharp charts, which I'll show you here in a second. It's also great for reversion to the mean. So it's good for reversion to the mean trading because it gives you that it gives you the extremes, gives you the overbought and oversold extremes. So usually when it's overbought, it reverts to the mean. When it's oversold, it reverts to the mean, goes back to the middle again. So it's really good for mean reversion trading. So that's MFI, that's money flow index. Basically, a simple way to think of it is just think of it as a volume. It's RSI with volume. Think of it that way. So now let's look at Chaikin money flow. So Chaikin money flow, created by Mark Chaikin, measures the amount of money flowing into an asset over a specific period. This usually uses 20 as its default. I like to use 21 because it's a Fibonacci number. So money flow volume forms the basis of the accumulation distribution line. And instead of a cumulative total, like the AD line gives you, money flow shows you specific look back period, 21 days. So it goes above and below zero, the zero line. So if it's above zero, that means that the trend is moving up, or think of it as money flowing into the stock if it's above zero. Right here. So it fluctuates between -1 and +1. So 0 is the center line. The indicator, it shows you where it reaches extremes, but it can stay up there and you don't know it's an extreme until it starts to roll over and come down. So I just use it to see whether or not it's above zero or below zero. If it's above zero, then it's still, money is still positive. The buying power is still positive. Buying and selling pressure, that's really what it identifies. So here's a good example down here. This is with Freeport McMoran. You can see it had a bullish flag. So here's the flagpole going up, pulled back within a channel. So that's a bullish flag. It broke out and started moving higher. But notice as it was moving lower right here, the money flow stayed above zero for the most part. Went up below it a little bit right there. But for the most part, money flow stayed above zero even as it was pulling back. So that tells you that the money is still in it. It's just having a normal pullback. Here's an even steeper pullback. And again, money flow stayed above zero in that case. So that's a really good way to use it. They actually work really well together, side by side. And you can get any of this on stock charts. Just go to the chart school if you want to learn about any indicators. I also put it into Copilot and just ask Copilot what's the difference between money flow index and Chaikin money flow. Of course, you all can do this as well at any time. So money flow is a momentum oscillator, combines price and volume to identify overbought and oversold conditions. There's the calculation. Good for spotting reversals and confirming price trends. Checking money flow is a volume-weighted oscillator, measures accumulation distribution over time using price and volume. So kind of like the accumulation distribution line, but that one is an unbounded indicator, which means it doesn't have an overbought or oversold area. It just goes up or down. Where in this case, it's actually using the accumulation distribution or the price and volume to identify buying pressure and selling pressure, or accumulation and distribution, which is what those two things are. So it usually uses a 20 or 21. I like 21. The default usually is 20. Ideal for confirming trend strength and identifying institutional activity. That's a really good point, actually, because it can show you institutional activity even as a stock is pulling back. Where up here, it's best for spotting reversals and confirming price trends. I like to think of this as reversion to the mean. So here's a comparison between the two oscillators and what the bounds are, reversal signals and trend confirmation. So that's what they're used for. All right, let me show you how I use them in my charts. Let's use, what do I want to use for this? Let's use, I'm going to use one that's moved a lot both ways. IBM, I think, has gone up and down. Yeah, there's IBM gone up and down. So I had these favorites over here, and this is what I mean. Don't put too many indicators on one chart. So this is my default chart, but if I want to look at it a different way, I've got favorites over here. So this is the one for Keltner channels. So I want to look at the ATR, average true range. This is definitely at an extreme right now. And then the third one incorporates the RSI and money flow, MFI, money flow indicator at the top. So this is the one that I use for money flow. So, and down here is how you would set it up. So you just go down here, you have your typical chart. So this is the symbol, IBM, right there. Down here under indicators, put in RSI, 14 is the default. So you just leave it like it is. And then money flow, 14 is also the default. I put it behind the other one, so behind the indicator. So in that case, the first one is above, the green is the RSI, and the pink is money flow. And I put them on top of each other, so behind indicator. And then over here, I can assign colors to them. I can assign opacity, so I want to make this pink, and I want to make it a little lighter so it doesn't overwhelm the RSI, and now I can see it in the background. And you'll notice here that it actually starts to move first. You can see, and this really gives you a good view of divergence. So right here, the stock hit a high right here. Money flow went way up, pulled back a little bit, and then came up and hit another high, significant another high right there. But money flow did not get as high as the previous time. So that is a negative divergence. It shows you that actually even better than the RSI does. So that's the way I like to use the money flow indicator, and that's why I like to put them both together. Since the MFI is essentially the RSI with volume, just think of it that way. And then you can see, I put this pink line going across is the 45 level, so you can do that down here. Here's the MFI money flow indicator. I put an overlay of a horizontal line. I identify 45, and I want that line to be pink, so it's identifiable. I can see right there it's 45. So even though it came up here, it actually touched 50, it didn't really get much above 45. So just because it comes down, it didn't quite touch the 20 line down here either. But just because it comes down and then starts to move higher is not necessarily meaning that I should be in it. I want to see it get above this 45 line decisively. And it didn't do that. It continued to go down. So that's the way I would use that. Down here is CMF, or Chaikin money flow. And this gives you a sense for institutional support and whether the buying power is still in the stock. And clearly, as it was going up, buying power was in it, but you can see a negative divergence there as well. So the buying power was dissipating even as the price was going higher. And I have the AD line, so I can show both of these together, the accumulation distribution line in the background. So now I can see both together. Accumulation distribution actually had continued to go up even as this was starting to go down right here, you notice that it went below zero, went below the zero line, but hadn't really fallen off yet. Accumulation distribution started to come down, but even as it dropped in this big gap down, accumulation distribution started going back up. So there were buyers stepping back in. And the CMF showed that there was still institutional support in through here. But if you use that along with money flow up here on the RSI, it wasn't time to get back in. It's still not time to get back in. You can see the volume is much higher. So that's how I use them. I use them using this number 3 favorites is my key one for looking at money flow, RSI, and for looking for divergences. I also put it in the wider view right here. So I have all 3 of them together down here now. RSI, money flow indicator, and the Chaikin money flow all together in one view down here, so I can very quickly right away see what's happening as this starts to roll over. Of course, the MACD at the top. So that's the way I use them on my website, on the chart lists page. If you want those same chart layouts and you want to create your own favorites charts with those, let me refresh this because I just updated these. So right on the chart list page for subscribers, right over here are all of those that I just showed you. These are all of my favorites right here. See, I just updated these today so that these will look just like the ones I just showed you. You can just click on any one of these. I use Netflix as the foundation for it. So if I click on that right there, it shows me the Netflix chart, shows me just exactly what I showed you before. So money flow and RSI at the top, Chaikin money flow and AD line at the bottom. And then you can then save this to so down here where it says save chart style, you can then save this. You can save it as a new one, give it a number, and then you can identify it and put it in your favorites over here. So I have this as my number 3 favorite. And that's identified on the website right here. So these are the same numbers that I use in my favorites charts. And you can download any of those and take a look at them. All right, that's money flow. Really valuable, great tool to be able to use. Again, I caution against trying to put too many things on one chart. It just gets too confusing. If you want to use multiple indicators, that's fine because they all have a different purpose, but put them in different charts, put them in different favorites so you can look at them in different ways. And that's pretty much how I do it. I'll show you my other favorites. So this is the daily wider view. This is the weekly right there. So I've got it both with the impulse bars and candles at the bottom. Number 6 is a monthly, so I'm going further back. Number 7 is the IBD format. So this is almost identical to what Investors Business Daily uses, plus I've added a little bit more to it, like the AD line and the scooter line down here. Number 8 is my relative strength chart. So how's it doing versus its peers, versus the S&P? How does this industry group do versus the S&P? How does the sector do versus the S&P? And then how does the industry do versus its own sector? So this just shows you the strength of this. In this case, it's Netflix, so we would expect that to be pretty strong. Number 9 is a 10-minute chart that I show every day, but a little bit different. But this is my own view of my 10-minute chart. If I ever want to see a 10-minute view, I just click on this button. Number 10 is my Keltner channels. So I got these all color-coded. That's the ATR lines right there. Again, they're right on my website, so you can download them. Number 12 is John Carter's squeeze. That's what his squeeze looks like if you didn't use this indicator. And then 13 is the stacked moving averages. So I just put all the moving averages from the fastest, which is the 5 at the top, to the slowest, which is the 200 at the bottom. And I like to see them all above each other naturally. That's a very bullish move, like all through this period right here. All of them were above, and then the 5 dropped below, and they started to drop below, but now they're coming back again. So I just like to look at this to get a visual representation of what the trend looks like. So all of those you can find on the website right over here. All right, now let's talk about tax loss harvesting. This is something I did last year. For subscribers, it's on the portfolios page, but I'll explain what it is. This is actually an idea that I got. It's not a new idea. It's been around for quite a while, but I was reminded of this idea by John Carter at the Money Show back in November. because it was close to the end of the year. So this explains tax loss harvesting. I put in a CSV file of all the stocks because I created a scan to look for the right stocks. Here's the full list, and I'll actually show you this. So this is the full list of 33 stocks from the scan last November, I think is when I ran this. So these are all the stocks that hit the scan. You can see some of them: Mosaic, Rocket Pharmaceuticals, CVE. These are all the ones. Solar Edge was on the scan. We'll look at these in a second. So that was the scan for tax loss selling. So the idea is, as the market sells off, or towards the end of the year, when people want to take losses in order to put those against gains that they've had for the year, many times they'll take the losses on stocks that are going down, and it might even push them down even more right at the end of the year. But those stocks are not always bad stocks. So what they do in January is they turn around and buy them back right at the beginning of January. Now, this doesn't work for every stock, and it's best to know the names and look at the charts and decide what they're doing. But this is the chart list from 2024. So the one that I ran in November. You can see what they've done. This is just today, but let's do year to date. And we can see the ones that have performed the best year to date right up here. And some of the ones you probably recognize. Celsius Holdings, well, let's take a look at this. So Celsius Holdings, I'm going to look at this in a weekly chart because it sends me back 2 years. So this is what it looks like right now. So my number 5 favorite is a weekly. So this was 2024. You can see before that, it was a really good stock. Continued to move up. 2024, it just continued to sell off. And tax loss harvesting, you would look at something like this and say, this is one that people are taking a loss on. They probably will want to sell it. So they're going to sell it in December. And then sometime around the beginning of the year, they're going to buy it back because it's been a good stock and it probably is still a good company. And that's exactly what happened. In this case, in February, they bought it back. And you can see what it's done since then. Now, if we go back and look at this again, it's had a 107% return year to date. So that is a double. $28, up $28 year to date for Celsius. So that is an example of tax loss harvesting. You want to find the stocks that have been going down, although they're good companies, and then people will sell them. This doesn't mean you're selling them. You just want to look for the ones that other people are selling. They've been strong stocks before, but they've been weak this year. And then the beginning of the year, they start to buy them back. And you want to get in right here near the bottom. So you can get in here in January, February, or right when it starts to move up. If we look at this on a daily chart, here's February right here. This is where it started. And using my normal identifier for getting in, it's right here where it closes above the 21. So you could have done it right there and then had almost a double in that particular one. All right, the second best one for the year was Solar Edge. So let's take a look at Solar Edge and see what that looked like. So if we look at it on a 2-year basis, their Solar Edge is selling off all the way from 23 through 24. Right here, November, December, right there, everybody was selling it, trying to take the losses to put it against gains. Now, that doesn't mean you would be selling it here. You'd be watching for stocks that are being sold off and then waiting for an opportunity to get in. In this particular case, it started to move in May, so you would have had to wait longer. Actually, you could have done it right here in February. So if we go back and look at this for the year, it's up 84% for the year. Pretty good gain year to date. But for the year itself, you can see back here, if you had bought right here in January, you could have had a nice gain right here. So you might have bought it in January somewhere around 13. It moved up here to 22, 23, made a $10 gain in roughly a month, and then got out. Or you could have just waited again till things started to move higher. And right here, a big white candle above the 200-day moving average, closed at 1829, and it went all the way up here to 31. So that is what tax loss harvesting is all about. These are the ones that were on the list last year. Let's look at some of the other ones, see what's on here. Mosaic was on the list, up 28% for the year. Archer Daniels, Microchip Technology, up 14% for the year. All of them don't play out, however. So you can see Rocket Pharmaceuticals down 76 for the year. So if we look at Rocket Pharmaceuticals, see what it did, you can see here's right here, look, that looks like earnings right there. But if we go back 2 years, you can see here, and this is one that would not have worked out, so you probably would not want to be in this one. But tax loss harvesting would have happened right here, but it continued going down all the way down here to June. So this one would not have worked. So you have to be careful of which stocks you get into. You have to, this is biotech also, so that's always a big crapshoot with biotechnology. But you have to know the company. You have to believe in what the direction of the company is doing. But tax loss harvesting can identify some potential big gainers in the very beginning of the year. I will do this again in November. I'll run another scan to identify these. It doesn't mean you need to use my scan. You can identify your own. I put the CSV file right in here. You can see this was run on December 26th. So this can be loaded into any other platform, and then you can make a decision of which ones you might want to get into, just to make a quick gain right in the beginning of the year, whenever those tax loss harvesting people go back in and buy it back again. CELH was a great example. That was probably the best one. All right, that's what it's all about. Let me know if you have any questions about this. I will run the scan again and put it on the website in December so people can check them out. I might adjust it a little bit based on the results of this one to try to get good stocks. It's kind of hard to find really good companies like Celsius that had sold off most of the year. That was an odd situation last year for this, that it sold off the whole year, but it actually made a double in about a half a year. So, all right, that's tax loss harvesting. So let me know if you have any questions. Also, please like and subscribe, and tell me if there's anything you would like me to look at in tomorrow's show. Right now, the market is extremely bullish. In fact, let's go back here and look at the market bias matrix page. You can see it's still moving down, actually, so it's not convincingly going back up, although the short term certainly is. That's the one that moves first. So short term is certainly starting to move back up. If we look at the S&P with the expected move, you can see it's getting close to the expected move now. Expected move is 64.76, and it ended at 64.45, which is what it's at right now. So 64.45, it doesn't have far to go to get to the expected move as of last Friday. So that looks pretty good. It's actually sitting right at the top of the channel right now. Might actually have even peaked above the channel line. So this might be actually a breakout. It's now a new all-time closing high. This high right here is this high was 64.27. So yeah, it's a new all-time high. High there, 64.46. So this is a new all-time high for the S&P. And if we look at the NASDAQ 100, you can also see it's getting close to its expected move by this Friday. And beautiful move today on all of the indexes, and especially actually on the Russell 2000, which actually probably had the best move. The Russell 2000 is already above its expected move. So those that bought options when it was down here at the bottom of the expected move, these options are going to pay off nicely this week. As we move into options expiration on Friday, we'll see what the market makers want to do about this. But it is absolutely breaking out. So the high here was 226.71, and the high today was 226.97. So a new all-time high by about 20 cents, 25 cents. So that's what it looks like. Max Pain is down here at 214. Just for fun, I'll look at Bitcoin as well. Bitcoin, I think, also didn't move quite as much as the rest of the markets, but it moved up today too, and it's starting to get back to all-time highs. It's not at an all-time high yet, but it's over 120,000. So, and you can see down here the RSI, the momentum is still moving higher. So everything is very bullish. Tomorrow is PPI. We'll see how that comes in. It might be another catalyst to move the market again. So keep a watch on that one. All right, thanks for watching. Let me know if there's anything you want me to take a look at, and I will talk to you tomorrow. Take care. By the way, you can find all of the Technical Tuesdays in a playlist on the channel. So if you want to go back to any of the trainings that I've done in the past, there's one back in December on Bitcoin that's really good if you want to understand Bitcoin better. Just go to that playlist on the YouTube channel, and all of the previous Technical Tuesdays are in there. All right, thanks everyone. Talk to you tomorrow. Take care.